Greetings and welcome to the latest installment of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping businesses and their owners re-domesticate out of volatile legal and tax environments like the Empire State to more predictable pro-entrepreneurship, pro-growth jurisdictions. Today, we are discussing the tax situation in New York State and how to move your existing LLC or corporation out of New York to a new state to avail yourself of tax benefits, among other advantages. And before you ask, yes, it is absolutely possible to move your company out of New York. I know because I have personally handled many of them, all with a 100% success rate to date, but I'm getting a little ahead of myself. First, a brief introduction. My name is Chad Cummings, and I am an attorney and certified public accountant, serving clients in matters of business, tax, and commercial law. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, as well as a bachelor's degree in accounting and a master's degree in taxation, in addition to 11 professional licenses and certifications covering accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. Now, the numbers are in and it is official. According to the Tax Foundation, the Empire State, or I should call it the former Empire State, is the worst place in the United States of America to conduct business, at least from a tax perspective. New York ranks 50th on the Tax Foundation's most recent state tax competitiveness index. That's not a good thing. That means it is dead last, the worst, below even New Jersey, below even California, and that's saying something. Below every other state in the union, the Tax Foundation's assessment does not mince words. New York has a high rate system, a burdensome and non-neutral tax structure, and at the margin, in an era of interstate migration, taxes now matter more now than ever before. IRS migration data confirmed that New York experienced the highest rate of population loss to other states, more so than any other state in the country. And the number one destination for departing residents is, not surprisingly, Florida, the Sunshine State. The individual income tax in New York is abysmal. It has a top marginal state rate of a whopping 10.9%. Remember, this is in addition to, not in place of, in addition to the federal tax regime. New York is one of only 2 states that imposes a tax benefit recapture provision, which is extremely unfavorable for taxpayers, meaning the benefit of lower tax brackets is phased out for higher income taxpayers. And the top rate is then applied to all income, not just income above the top threshold. The graduated system is a fiction for high earners. If you reach the top tax bracket, which is a dubious honor in New York, you pay 10.9% on everything. Now, the city, of course, adds its own progressive income tax on top of the state rate. So the city rate of almost 4% is in addition to the state rate, which is in addition to the federal rate. For a business owner operating a pass-through entity and residing in New York City, the combined state and city income tax on pass-through income is almost 15%. Oh boy, that is the highest combined state and local income tax rate in the country. A very dubious honor indeed. On $1 million of pass-through income, the city and state income tax bill is almost $150,000 per year. That's a pretty nice car. In Florida, that figure is 0. In Texas, that figure is 0. Over a decade, the difference is almost $1.5 million, and that's before we account for the time value of money. Oh, but things get worse. New York also imposes the so-called convenience of the employer rule, which is really not convenient at all. Under that rule, which is extremely egregious, A non-resident who works for a New York-based employer must pay New York income taxes on that income, even if the worker performs the work outside of New York and has minimal contact with the state. A remote employee living in Idaho or Texas or even on the moon who works for a New York company will owe New York income taxes, even if they never set foot in the Empire State. Wow. The so called convenience rule reaches across state lines and taxes income that was not earned in New York based on the location of the employer rather than the location of the work being performed. The corporate income tax is graduated with rates ranging from 6.5% to 7.25%. The state maintains a capital stock base within its corporate income tax that was scheduled for elimination, but surprise, surprise, has not yet been repealed. New York's treatment of international income is extremely aggressive and unfavorable. The state imposes an estate tax in addition to and not in place of the federal estate tax regime. And in May 2026, the governor, God love her, announced a new pied-à-terre tax on second homes and investor-owned apartments valued at $5 million and above, projected to generate at least $500 million per year and to help close a budget deficit exceeding $5 billion. State and local tax collections per capita are nearly $13,000, the second highest in the country, behind only the District of Columbia. State and local debt per capita is almost $18,000, the highest of any state in the nation. Needless to say, those numbers do not balance. New York collects more per person than every state except DC, which is not yet a state, and owes more per person than every state without exception. Lose, lose. There is one sunny spot, really just one. The pension system, or the public pension system to be more specific, is funded at 93%, which is among the strongest in the country and eliminates one source of future fiscal pressure, but it does not eliminate the $5 billion budget deficit, the political incentive to add new taxes, the pied-à-terre tax, or any of the other extremely egregious and shocking tax proposals on the table at both the city and state levels. The state sales tax rate is 4%, which sounds reasonable at first blush, but the average combined state and local rate reaches almost 9%. The base is narrow, with groceries and clothing exempt, which forces the rate higher to produce the same revenue. The cigarette excise tax is $5.35 per pack, which may not matter to you, but it is another interesting variable worth considering in the context of the bigger picture. Now, keeping all of that in mind, redomestication is the lesser known legal process of transferring a company's state of domicile to a new state without dissolving it. That's important. Without creating a new entity. That's also important. And without triggering federal income tax, but only when performed with the strict formalities required under the Federal Internal Revenue Code, applicable Treasury regulations, and the statutory frameworks of both New York and the destination states. This is not a do-it-yourself project. When executed correctly, the company retains its existing federal employer identification number, contracts, credit history, and bank accounts. Foreign entity registration, which New York refers to as an application of authority, is not the same thing as redomestication, because foreign entity registration, also referred to as foreign qualification among several other terms in different states, does not change the company's domicile. It does the opposite of what you are trying to accomplish, because foreign entity registration maintains the entity in New York and merely adds a second layer of compliance and tax obligations in the new state. It is not a relocation mechanism. A traditional merger, which is also not the same thing as redomestication, creates a new distinct entity in the destination state and can trigger serious tax complexities. Finally, dissolution is the death penalty. Dissolution terminates the company. Dissolution is not a relocation mechanism. It is the business has failed and we are going under and shutting the doors mechanism. It is a liquidation mechanism. Dissolution should never enter the conversation. And if you have a so-called professional suggesting dissolution as a mechanism of relocation, I implore you to seek better advice. Redomestication, when paired with a change of personal residency, that's important, and this is another important and, a reduction or outright cessation of business operations in the Empire State can reduce or even eliminate state tax exposure for the entity and its owners. But that move has to be real. This is not just a paperwork exercise. Now, New York ranks last, 50th out of 50, a combined state and city income tax rate that is almost 15%, a so called convenience rule that is anything but convenient, a recapture provision that eliminates the benefit of lower brackets, the highest debt per person of any state, a new tax on second homes, and the highest rate of population loss in the country. I wonder why. The residents of New York are not reading about this trend, they are the trend. I know because I've personally worked with a number of them to relocate to the jurisdictions where I practice. Meanwhile, you have states out there like Florida, like Texas, and a few others that impose no state level personal income tax, and where most small and medium sized businesses don't pay income tax either. Now is the time to act before the New York State House considers changes to the law to hinder or even eliminate the option of redomestication. If you have questions regarding redomesticating your existing limited liability company or corporation out of New York, please use the link in the description for more information on this process and to schedule time for you and I to speak one-on-one about your specific scenario. Again, my name is Chad Cummings, and I hope that you found this information informative. As always, the information in this presentation, like all of my presentations, is general in nature and is not legal or tax advice, because that advice, by definition, must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my many earlier timely talks on these topics, please visit my firm website at www.cummings.law, not .com, but .law, to schedule time for a consultation. I look forward to that opportunity to speak and perhaps even work with you very soon.